Hello and welcome back to America's Forum here on Newsmax TV. I'm John Bachman. It's great to have you with us here on this Valentine's Day Friday. Back with us in the studio, Jeff Yastine. Jeff, great to have you with us. And a great conversation we just had with Bill Isaac there, former chairman of the FDIC. Biggest takeaway from our conversation?
I think that, as he said, the Fed they're stuck. Janet Yellen is stuck. They have to continue to support, unfortunately, with this stimulus and the quantitative easing. And as they pull it back, which they used to do 85 billion as of December, now it's down to what, 65 billion. So they've reduced 20 billion worth of less of stimulus.
Yeah.
And you see the results around the world. You saw we had a sharp knee-jerk sell-off, the first part of January, and we're still seeing sell-offs in emerging markets around the world where, again, it's like this long daisy chain.
Yeah.
And as soon as the Fed makes a change, everything, the money just starts sloshing all around the globe.
Yeah, and it's like a knee-jerk reaction both ways. When Yellen says some things that they're going to continue with the kind of the same thing, the market jumps as well. But striking to watch some of this testimony because it impacts all of us. This is our money we're talking about here, but it gets really down into certain numbers, and you hear Yellen talking about on the Hill. One particular exchange borrowed Jim Bianco of Bianco Research, who wrote that in a note that to his clients, it appeared that Yellen was painfully flustered during some of her testimony on Capitol Hill, especially when North Carolina Congressman Patrick McHenry questioned the Fed chair about the controversial changes to the VOCA rule. Here's a clip.
And I was reading yesterday in the Financial Times. We have this discussion about the VOCA rule and the exemption that the VOCA rule provides for sovereign debt vis-a-vis corporate debt in the United States. And I read in the Financial Times yesterday that Danielle Nui, who's the head of the Bank Supervisory Agency in the European Union, she said that they're really going in a different direction in the EU. And in light of their recent crises with sovereign debt, she said one of the biggest lessons of the current crisis is that there is no risk-free asset. So sovereigns are not risk-free assets. That has been demonstrated, so we now have to react. In essence, the EU is going a different direction when it comes to sovereign debt than we are in the United States. How would you react to that?
I believe the exemption for U.S. debt markets was built into Dodd-Frank. That was explicit in Dodd-Frank.
Okay, but what is your reaction to that? We're policymakers. We could remedy that if you think that that is a flaw.
We've tried to write a rule that that is consistent with Dodd-Frank as it was legislated.
So would you look favorably upon us saying that sovereign debt should not be exempt or should be comparable to corporate debt?
It's something that I would have to look at more carefully.
But did you not look more carefully at this subject matter when you wrote the VOCA rule?
Well, we put into effect the allowance that Congress included in Dodd-Frank to exempt Treasury securities.
Yeah, well, no, that's Treasury securities. I'm asking about sovereign debt, which was excluded from the VOCA rule. Written into the language of Dodd-Frank is exclusion of U.S. sovereign debt, not the exclusion of other sovereign debt. I would call this a lack of enthusiasm from you. I would surmise.
A lack of enthusiasm or something else. Jeff, I only have a public school education from the state of Georgia. What did I just watch right there?
I thought that was a fascinating interchange. It's very rare to see a Federal Reserve chair she was either caught off guard or she just didn't want to talk about it. And here's my take on it. The VOCA rule was put in place to keep banks, commercial banks, from engaging in speculative trading and acquiring risky assets that if they all head south at one time, you get this systemic risk, which used to be,
Exactly.
a big byword during the financial crisis. And I think the way the question is being framed there, it's sort of like sovereign debt. Now, Treasury bonds and U.S. Treasury notes are sovereign debt, just by another name.
That's right. By sovereign, that means that's publicly owned debt, right?
It's publicly owned, and it's by a sovereign, by a country,
right.
by a nation. Okay. And if she had expressed herself in the wrong way, I feel like what she would have been implying to everybody in the stock market and Wall Street that's watching this is the implication that somehow U.S. Treasury debt is not basically as good as cash, that is risk-free, as is always said in the public markets. That's the one thing you can bank on, is the U.S. is not going to welch on its debts. That's why it had, up until last year sometime anyway, its AAA credit rating.
Correct.
So I think that was her concern, is she didn't want to go in that direction, because if she did, there's almost an implication that U.S. debt is not risk-free. And that would be, everything sits on the U.S. supporting its debt.
It's in the Constitution.
And the king dollar, that's why the dollar is what it is in the overall, regime of national currencies these days.
We'll give Yellen some slack. It was her first attempt out there on the Hill. Hopefully she'll be maybe a little better prepared next time around. Moving on now, let's take a look, if we can, if we have any of our social media responses available on this issue. Do we have those, guys? Okay, well, we'll move on. We'll try to get to those later in the show. Let's talk about this big deal that's going to affect all the way pretty much a lot of us get our cable and television. Comcast, Time Warner, they've dominated the headlines yesterday and today. Most are highlighting the general pessimistic feelings of the public, with growing concern over monopolization and rising service charges. Comcast is already the largest provider of television and internet subscriptions, but by buying Time Warner Cable, they are securing their domination of the market. The acquisition gives Comcast a whole new customer base, and experts are already predicting that customers are likely to see a variety of packages being offered based on internet speeds, with users paying more for faster connectivity. Jeff, this is kind of like what happens in a way with our cell phones. We pay for the data as we receive it here. They want to do this. Do you think the public will support this, especially now when you have things like Netflix and you have Hulu and you have other alternatives? I guess you got to
support the merger?
Well, people are having more choices, and we've become accustomed to more choices. So obviously not Time Warner, but Comcast wants to be the choke-off point for all this information here. But people are getting used to these choices, and Comcast already has a bad customer service reputation.
They do, and I have to really wonder whether this deal, which I presume is going to undergo some degree of regulatory scrutiny from the antitrust folks within the government, whether it's even going to be approved. And I know they don't control every market, but look here in South Florida, your choices are really Comcast. Or if you live, like I live near a fiber optic line, cable that AT&T controls, so they have their sort of cable TV alternative.
Correct.
And then you have Dish Network and all that. But still, if you want internet access, you really just have those two choices. I really wonder whether this deal is going to get approved.
And in terms of high-speed internet, there are alternatives, but nothing is quite as fast as this cable internet, as the fastest connectivity. And so, if you're Comcast, which already has this bad reputation for customer service, do you think they care at this point that these two companies were rated dead last in that survey we mentioned?
I'm sure they make noises to caring, but people have been complaining about Comcast and in general, cable companies for years, and it always seems to be pretty much always at the rock bottom.
Yeah, it doesn't seem like this is going to give.
If they really cared, I think they would have changed somewhere down the line, before this point.
We'll see if that comes down the road. Let's go ahead and get to the social media responses that we have coming from you guys. If we could get those up on the screen. We want to hear from you, of course. We want you to participate in the discussion. You can always find us on our social media sites, Twitter and Newsmax, or Twitter and Facebook. Find me directly at JohnB_Newsmax. Also at Connect at Newsmax TV. You can email us. We'll be right back after this.